Hello folks, this is Lee Gettess with the Market Sense for the week of April 21st, 2015. As I have for the last, 12, 15 years, I look at the Trade Navigator charts for all of my trading. And we're going to look at the weekly bond market chart here, and the last few weeks are really getting frustrating because that is the absolute definition of a sideways pattern. Awfully tough to tell what direction the market's going when it's not going in a direction, and that's what it's doing right now. We have potential resistance up here at 66.05. Won't really matter if it gets there. We've got potential support down here around 162.28. Won't really matter if it gets there. I mean, when I say won't matter, it doesn't mean anything. I mean, it could hold it or it could break because the sideways pattern is going to get broken at some point. You simply can't determine the exact timing of it. And right now, this week's just inside the last week and hanging around the middle moving average there, which is 164.20. I think we really need to see them go below 161.12, which is the mid-Keltner channel here, or above 167, which is, well, it's a little above the previous swing high. I think until they do that, we really can't tell what they're doing. Now, you could try to be aggressive, sell the highs, buy the lows, but you better be quick because once this breakout does occur and they move out of this sideways pattern, there will be no chance to recover. You either get out right away or you'll be, on a rocket wondering where you're going. So, just not any direction there until they show us. They're not going to tip their hand and tell us before they do it, I don't think. Stocks are kind of the same way. Heck, you could make the case that they've been in the same price range all the way back here, which is like 9-10 weeks ago. This week is, well, struggling. We're struggling to make new highs, can't seem to do it. If they don't exceed 2107, the downside is still really large potential. They broke down really hard. Most of this bar actually was created last Friday, but they did hold right in there at that support, the middle moving average there, and they have not been down to it this week. That moving average, in fact, is 2070 for this week, and they're holding nicely above it. I really didn't think that this upper moving average at 2095, didn't think it'd be critical unless it slammed them down, and you can see they've been through it a bit, so it hasn't exactly slammed them. Not really tipping their hand about what to do. Heck, they could be all the way down here testing the lows of the sideways here in the 2030 area. That would be a pretty good break from here, but it still wouldn't mean that they're really going lower. So, sort of like the breakout setup in bonds, we're kind of the same way in the S&P. Until they go below 2030, not 2130, below 2030, or really it's above 2110, which is the old swing high here. Until they do that, they're just sideways, and you can try to nibble the edges, but again, it's a dangerous thing to do because once they start to move, you will not have a chance to get out. They'll just blow out and see you later. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.